Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Monday. Let's take a look at some legacy stuff on the macro side. Some interesting developments on the rates front, bonds, Mag 7's mostly a Meta and Tesla story. Nvidia just sort of chilling. We'll take a look at all that at the end here. But first things first, crypto asset flows globally from James at CoinShares. We've got a positive 370 million-ish week. I'll take it. We'll take any positive week over week action. The key here is sustained. It doesn't have to be mega billions every week, just sustained, right? We have a fixed amount of BTC. It's a non-dynamic supply as far as being mined. Supply will be unlocked as price goes up, sure. But on the creation front, BTC cannot be created any quicker than it already is for the most part. So having some sustained flows should help price at least maintain the current level. Like I said last night, we've chewed through a ton of supply unlocks already over the past 6 months. And we've come out back into the middle of the range. Trend metrics starting to look decently okay. You can see here on the cloud, we still don't have a bullish cloud. We still don't have a bullish TK cross. The metrics on the daily, as far as the cloud is concerned, have been poor. They have not led to any discernible trade since May. So it's going to take a lot of convincing on the trend side, just to be sure. The market's going to take a lot of convincing. We're also still in September. We're pre-election. So as good as this looks, I'm not going to get too excited until we are making higher highs. This could be a triple bottom, inverted head and shoulders. This could be just a double bottom. We're doing bottomy things. We've spent months doing bottomy things, and that's what you want to see. So there's a lot of optimism here based on where price sits at the 200-day moving average, above the 20-week moving average. This is the 2-day cloud. Much less choppy, much less noisy. This told you to get out in the end of May, beginning of July. Bearish TK cross there on the daily, and it has not given a re-entry signal yet. So we are very much looking forward to anything similar to October 2023. That's probably going to take 10 to 20 days, so long as price remains at the current level or higher. Looking at the Commitment of Traders report from CMR, Jason Shapiro, he puts together these graphs. And what he has found for other markets is that large speculators in the blue are generally wrong. Commercials are generally correct as far as directionality is concerned. Small speculators also generally wrong. So what you want to see on graphs like this is maximum large speculators, extremely long commercials. And we're not exactly the beginning of the year as far as positioning is concerned, but it's starting to look better. And this is just adding more potential move higher if we decide to move higher into October. And this is the ETH chart, also showing similar commercials, increasingly long, large spec, increasingly short. So positioning data looks encouraging. We also have the best September on record. What I think is hilarious is everybody and their mother knew about September seasonality going into September. And then it's like everybody sold on the first couple days of September. And now we've bounced back. This is all markets, not just BTC. But this is the best September, at least since 2013 for BTC, which historically does not have bullish Septembers. Also since 2013, when September has been bullish, so has the entirety of Q4. So that is also an encouraging sign. Should we close the quarter positive at all, we may see a string of positive months for the rest of the year. And that would make sense if we have a bullish breakout at, say, 66, 68, 70, new all-time highs, that sort of thing. I just don't know realistically how much we can expect pre-election in October just yet. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. There are a decent number of alts, let's say, that are doing well on USD pairs. This is a rolling 24-hour period here. many alts up 5, 10, some even more than that percent in a 24-hour period. This is Tau, and on the daily, there's not really much to say. I think we had talked about this on a stream last week, but there's always something, right? There's always some sort of bottoming process, and you can easily pick out a potential triple bottom here. It broke up, great. Okay, it's what do you do after that? How do you trade this? This is what TA is for. Horizontal resistance, neckline, breakout, entry, Bob's your uncle. You're off and running. One thing we have to be careful about up here with a lot of these charts is they will quickly give back just about everything. Stairs up, elevator down. That's not bearish FUD. That's just how alts operate. So to see this potential parabolic advance here, I would definitely be tracking that. If this looks weak, if this starts to break, I would get anxious. I would get nervous. You can also look at the Williams fractals, which may be hard to see on stream here, but they give you a trailing stop loss. And on alts, I would use a lower time frame than the daily. I would use a lower time frame than even the 12-hour. 4-hour, 8-hour. Again, they tend to move fast. And since the breakout, you have not been stopped out here using trailing fractals. So currently that's at 519. And I don't think you're going to be disappointed if, let's say, you were trading this at anywhere close to 350. This is already a 50% move at the current trailing stop loss. All right, so for legacy this week, there's a ton of Fed speak basically every day. There's this, what is this, right? This is like 25 Fed speakers on Thursday. Okay. And then we have PCE on Friday with more Fed speak at the end of the day. So data-wise, we also have a GDP revision, but the Fed speak is going to be important. How are they positioning any sort of forward guidance, any sort of future cuts into November? What are they seeing that looks strong versus weak? Who are the hawks? Who are the doves? And how does the market start to price that in? The GDP number, like I said, is also this week. I don't think that's going to be that big of a deal, but the market feels like it needs a catalyst to do much of anything at this point. On the legacy side, we'll take a look at the charts, but they don't necessarily look like there's some sort of mega setup that's just waiting to break out just yet. Looking at the current Fed probabilities, it's basically 50-50 for a 25 versus a 50-point cut next meeting day after the election. So this will shift with data, this will shift with Fed speak, but there's a real possibility today, sitting here, that we have another 50-point cut in November. Looking at Trueflation, it looks like they updated some of the weightings, perhaps. They updated maybe some of the constituents, but we are still sub 2% at around 1.4. Zooming way out to around COVID, we are finally back to a decent level here, sub 2% on Trueflation. CPI isn't quite there yet, but it's getting there. The last CPI was 2.5. The next CPI is projected to be 2.27 for this month with 23 days behind us now. PCE also continuing to come down. So yes, we aren't quite there yet at the 2% target, and that's why some bears are getting very angry that we're cutting. But by other metrics, we are there and have been there for a minute now. And looking at the future, the potential forecasts, these do not look like they are reinflating yet. Now, if we drop another 50 basis points into 2025, then we can talk, right? But this is the data today. The data today looks fine. Is everybody happy with aggregate inflation? No, but the year-over-year inflation has calmed down significantly. If we look at inflation across the G7 measured the same way that, I believe this is Europe or the UK measures this, the US and the black line there doing the best outside of Canada, which I think is in a full-blown recession. On the headline side and on the core side, we're also doing much better than the group on a year-over-year basis. And I believe most of these countries outside of Japan are already cutting rates or have already cut rates. And we can look at collectively, we've got a decent way down here. This is pre-cut with the upper bound at 550. But we are potentially headed back to around 3% on rates. And that should be constructive for risk assets over time here. Looking at the yield curve is already pricing in a 3.5-ish% on the 2-year. So for the belly and the long end, the question is, okay, how much more do we really think rates will come down? Because we're already pricing in a significant amount of cutting yet to come. The long end in the green, this is the current week, also coming down significantly. The very front end is led by the Fed, but the yield curve is still inverted across most of the curve, not all of the curve, but most of the curve. And it may take another couple of Fed meetings until the curve fully uninverts. And looking at the bond complex here with TLT, IEF, SHI, and AG, depending on your own opinion of where you think rates may go, some of this may be priced in. As far as TLT, how much lower do we really think the long bond is going to go? That will affect price here. The most dynamic side of the curve, the 1 to 3 year, looks very good still, continues to look great on further upside. But the rest of this AG and the 7 to 10 year bull trend, sure, but realistically, how much more can we expect? Not including dividend here, just price wise, based on how the curve looks currently, based on where we think rates will eventually end up, right? So we may be in a little bit of a sweet spot on the bond ETFs as far as price is concerned. Looking at the curve, the 10-2 is now uninverted, no doubt about it. Last week it was kind of hovering at the 0 line, but the 10-2 is definitely uninverted here. As you can see on the curve, here's the 2, here's the 10, and this is how it should look. So that means the front end should come all the way down, or the belly up, long end up a little bit. We'll see what happens, right? That's the difference between a bull steepener and a bear steepener. But we know as long as the data is good enough, we should see the short end continue to come down. Here's the 10-3, still uninverted, the 3-month. This is the preferred yield curve as far as recessionary chances go for Cam Harvey, the creator of the yield curve indicator. Looking at global liquidity in the green there, we've ticked down slightly, mainly because US liquidity in the white has also ticked down. The dollar weakness has also sort of plateaued. US liquidity draining into the reverse repo, which has been rising over the past week. And all this goes back to the bond and rates question. If you don't think the dollar is going much lower, you probably don't think that rates are going much lower. You probably don't think that we're necessarily headed to a recession. So there's this give and take between, on the risk side, we want rates low, dollar low, but we also don't want a recession. Here's the dollar DXY. 100 is the only level that really matters. Anything below that, and we should have a grand old time, a nice little party. Preceding this week, we did have a very fast plummet to this level, bottom of the range here. So it probably is going to take some time into Q4 if we are going to break 100, but that is the level to watch. For BTC specifically, how does BTC react to dollar below 100? Looking at the S&P, we're just chilling at all-time highs. I wouldn't say this looks turbo bearish. Is it overbought on the weekly? Sure, we talked about that yesterday. The daily cloud says this is fine. There's a bit of a TKC clamp here. I don't really see any pressing chart patterns other than maybe a cup and handle up here, but it looks okay. It doesn't look like it did earlier in the year where we just sort of climbed. I think that may take some time. Even this fast climb between May and July doesn't quite look like we're ready for that yet either. We're still very far away from the blue line, the Tenkin there. So any sideways range, any reconsolidation up here, I think would be very healthy for the S&P. Best performing sectors, utilities. I don't think a lot of people had that on their bingo card this year, largely because of data center and AI stuff. They built the chip components. NVIDIA has done great. They've bought these rigs, and now they're running into this issue, the hyperscalers, where they are looking for power. We just had a Microsoft deal with 3 Mile Island to potentially reopen 3 Mile Island. We had Amazon announcing their nuclear deal. So the race for power is real, and that's probably why you're seeing utilities do as well as they are. We also have the 60-40 portfolio, the classic pairing, hitting all-time highs. So any boomer portfolio is doing very, very well up here. Still, anyone who has held on over the past decade has done great. Looking at the S&P into the election cycle, I keep seeing these. Is it an open field? Is it a closed field? Is it incumbents running? Whatever. Yes, we have some issues going into late September, which we are there now, right? We're already sort of bucking that trend with the S&P. We typically bottom into October on the legacy side, but based on how price is sitting today, it doesn't look like it wants to go down at all. It just looks like it wants to consolidate. And then on this potato chart, here's the open field. And if you are a macro bear, then, you're looking at this, you're thinking, okay, this has to go down. This goes down in October, it bottoms in October, eventually bounces later in the year. We just really haven't seen that yet. This, to me, is trading more like the green line, the sitting president running, which it kind of roughly is a sitting president in that it's a vice president. I would love to see 10,000 years of data points on a vice president running, but we don't have that. So I wouldn't quite call it an open field, and I wouldn't quite call it the incumbent either, but it's somewhere in between. I just don't think there's a pressing trade here one way or the other on the index, sitting here at all-time highs. This is US versus developed markets or emerging markets, and this is a lot of ammo for non-US markets to start to do better, just on a relative value basis. You can think of it as US dominance, Bitcoin dominance, emerging markets, altcoins, stuff like that. Just an absurd valuation relative to global markets. So it may be harder for tech stonkery to continue to do as well as it did. Here's the Qs. They also look fine. They look okay. Maybe this is a W. Maybe this is a massive triangle. None of this looks bearish. We're not printing bearish patterns. We're not sitting below the cloud. Doesn't look super exciting generally, but this could go much lower and still be fine on trend. We do not have this early 2024 riding the Tenkan up. Not yet. We don't have this mid-year exploding above the Tenkan either. We're just sort of sitting here flat, sideways. A lot of that's because most of the Mag 7 is doing just that. It is reconsolidating. Here's NVIDIA. It was on inverted head and shoulders watch maybe a couple weeks ago. At this point, it's probably just a vanilla triangle, 50-50, no pressing trade one way or the other. They've got earnings, it looks like, in November, their next report, and it may not move until then. We'll see. But it doesn't look like it wants to do anything here as we stand. This is Apple, and it sure ain't 2023, right? This is very clearly a bullish trend. This has been tons of chop, M top, diamond top. Just doesn't look bullish per se. Is it a cup and handle? It's just a bunch of nothing. Definitely not one of my favorite charts right now. Microsoft also chopping around since March, printing a bunch of different patterns, just kind of all over the place. Cloud is starting to like it again, though, as it regains potentially a bullish Kumo twist, a bullish TK cross. You got to watch out for the other half of this diamond if that happens. But here it looks okay. It's just, what's the trade? Is you just assume that this is a long, you can. It's back above the cloud. Trend metrics look okay, but you're still in previous chop zone. Meta, on the other hand, new all-time highs, looks great. Ascending triangle, looks like it has plenty of room to go. Netflix, to me, just looks forever overbought, so I don't really have a great opinion here. Maybe rising wedge, maybe triple top, something. Maybe this forms some sort of cup and handle one day into 2025. I just don't know who's excited about buying Netflix at 705 all the way up here. Amazon, on the other hand, it has basically went up in a straight line from 2023 to mid-24, but it did pull back significantly. Maybe this could be interpreted as a cup and handle. Maybe this will break out significantly higher. Maybe there's some AI unlock here, right? Part of this TA game is always trying to figure out what's the narrative going to be to help push price higher or lower. What's the catalyst? Is there a headwind or a tailwind? I think there's, to me, more surprising tailwinds than headwinds here, other than antitrust stuff, which for Google is helping keep this chart lower. But I personally don't think the Apple phone sales are going to be that impressive. We're not seeing that on the chart yet. This thing just looks like it's all over the place. So maybe one of these other companies will start to do better in the AI front. I think that's why Meta is doing so well, harnessing AI effectively. But Amazon doesn't look too bad either. And maybe best of them all, which I'm not a big fan of Tesla myself, but the chart's the chart. The TA is the TA. Bullish Kumo breakout, bullish TK cross today or tomorrow. A massive potential inverted head and shoulders breakout above 270. It had this mini inverted head and shoulders that we talked about a couple of weeks back now that has broken out. So this chart has looked better and better and better. So that's also something to watch into Q4. Do we see NVIDIA breaking out? Do we see Meta reaching its target? Do we see Amazon starting to break out, right? Do we see Tesla breaking 270? These are all things to think about into Q4. Lastly, some minor charts in Palantir. Outside of cores, Wolf is the second best looking chart to me. Cores at all-time highs. I mean, you can't argue with that. This is trying to do something constructive. it was a little more convincing for me going into July, seeing this triangle consolidate for 6 months. But yeah, sure. Trend looks good. It looks like it's trying to regain something, trying to do something here. Doesn't look horrible. Most of the miners look horrible. BT is another one to watch probably into Q4 because you've got potentially an extended consolidation period here with a breakout above 450. Then lastly, Palantir, because I was getting a lot of questions on this. You always got to be careful when you're 2 years into a move, a year and a half into the move above the cloud, back at previous all-time highs. Yes, this is AI. Yes, this is military industrial complex. I think this measures to 60 plus if you take the high to low. All that is perfectly possible. But just like with Tau, anytime you see a parabolic move like this over time, you just have to be careful. Even on gold, there's a parabolic move on gold. You just have to take those breakdowns fairly seriously because you just know you've got a ton of people just piling in. And that's why this thing's parabolic. Generally, you get more and more dumb money on charts that look like this. And then they lose it all. It just collapses, right? It goes back to probably 30 or something after hitting 60. So all in all, on the indices, not really too much to discuss. Few individual names look okay. And it generally feels like the market's waiting for the next catalyst outside of a rate cutting cycle. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.